This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil, and we're going to talk about breakouts today. And you're probably going to just switch away after I say breakouts. For some reason, people don't like them. I don't know why. I think there's a great place for them in a trading strategy. I use the pullback trade. Obviously, I talk a lot about that. But if you're not trading breakouts, you are missing a massive opportunity. I can't even explain to you how, for me, to me, it's the one that if I'm really looking to build wealth, then I'm playing a breakout strategy. All right. The pullback strategy is a great trading strategy to create intermediate term swing trades, and it can do really well with those. If you're going to build wealth buying stocks, putting them away, and seeing them run for several years, you're going to do the breakout strategy. So you need to learn this strategy. I think it's something that I would spend some time getting better at. Now, I know a lot of people buy the breakouts and then it re-enters and they get stopped out. And I'm going to try and talk about some things today that maybe will help you with that. Now, if you want to learn more about some of these strategies, you can go to my book. You can click the link in the description to find out more about it. And also, if you do enjoy this content, please hit that like button and also subscribe. Okay, so I'm looking at the chart of SLV. And on the left side, I've got the monthly chart. On the right side, I've got the weekly. Now, when I go looking for stocks for my subscribers, I'm really focused in on the monthly and the weekly. All right. Now, the reason for that is because we want to look for stocks that have stored energy for a period of time. Okay. If we have a stock that is been working sideways, forming some type of a channel, and has failed at a specific level, let's call it 25 here. Okay. And it has done it for several years. You can look down here. It's been 3 or 4 years. Silver did nothing. It worked sideways. It bounced around. Now, it went from 25 down to 18 or whatever, and then bounced up. There might have been some trades in there if you wanted to try and trade or whatever. But the reality was that this kept bumping its head on this, call it 25. Okay. And when we have something like that, all right, we're looking at a stock that when it eventually gets through that level is likely, so all of this money that's been channeling in this area is going to unwind as this is moving up. And we're still in the process of underwinding this huge move, right? So there's a couple things we can look for while this is taking place. One of the things is ADX, and I talk about this ad nauseum in videos going back for years now. And what we're looking for is not only, so there's two parts to the ADX. One is low trend strength, and this line going across 25. When the ADX line is below the 25 line, okay, we have low trend strength. That means that the buyers and the sellers there's no one in command really, right? It's just wallowing around and working, doing a whole lot of nothing. All right, and that low ADX, that low trend strength condition is a precursor in a lot of cases to a big move, unwinding of this energy built up. All right. So if a stock spends a significant amount of time working sideways and it forms some type of a pattern. Now, in this case, this is a little bit different what happened with gold and silver. It wasn't really like an ascending triangle. It might have been in certain cases. In this case, it was really more of a pattern that I would almost look at it like a break of the downtrend line, and then we worked our way sideways here and broke out. So 1, 2, 3 pattern, 1, 2, 3 reversal. And that can happen in a low ADX condition. This is, talk about this a lot actually with my subscribers. We have low ADX pattern and we can have a 1, 2, 3 reversal take place. All right. I mean, I do go into a lot of this in depth with in the course as well. I talk a lot about breakout. There's a section on breakouts and stuff. But so here's the thing: if I have this stored energy on the monthly chart, all right, I'm going to trade off the weekly. But I am not doing anything off the weekly unless I've got something significant forming on the monthly chart. All right, that is the starting point. And I think you want to be able to you want to know the strategy of how to trade, different patterns and everything. But you do want to recognize that the monthly and the weekly, working these things together, the higher time frame is telling you the setup, all right, and the lower time frame is the trigger. And that's how I would handle a breakout pattern too in a lot of cases. And I think what most people do is they look at a weekly chart and they're looking for a breakout pattern, and they're not really looking at the monthly necessarily. And I'm really keying off the monthly. I'm saying, look, the monthly needs to be set up. It needs to look really, really good. And preferably, I want it to be tight. Now, when I use the word tight, I'm talking about a lot of overlapping price bars and not a lot of volatility in there. And how do I measure volatility? Well, the way I look at it is when this 25 line, if we can spend time where not only the ADX line is below 25, but we also have the two DI lines below 25 for a decent amount of time. In this case, it was 2 to 3 years on the monthly chart. Then we have some stored energy that, because it's quiet, it's a quiet pattern. It's not only low trend strength, it's low volatility. And when we have that, that is a sign of strong accumulation. All right. Now, when we go to the smaller time frame, we can do the same thing. We can see that we have the downtrend line drawn, okay, and then we go through this pullback phase. And then here's the interesting thing when we zoom in on this. Whoops. When we zoom in on this, look at the big green bar. That's the kickoff that is breaking basically the 3. All right, so this is basically where I bought this for me. So I didn't want to pick out stocks that look great or whatever. I picked two. I'm going to give you 2 examples of breakout plays that I actually did and still in. I'm still in these. I bought them and I pretty much trail a stop. I might trim a little bit, scale a little bit, but for these longer term patterns, I sometimes in this type of situation for the 401k, I put them away, and I'm going to see how far they want to go. All right, now let me switch over to WPM, and this is the same kind of pattern. What's interesting is they have sort of a inverted head and shoulders look to the pattern itself. But there's a couple things that are interesting. So this one didn't have the same low ADX condition in place, but it had strong ADX leading up to it, and then it went sideways here. And then look at the way this played out on the MACD. The MACD turned right at the 0 line. All right, after spending a couple of years working down, it turned up. And then we pushed higher and consolidated, and we hadn't broken out yet. So again, look at this one. This is the 50 mark. So the other one was 25, and this one was 50. You need a sideways line that you see over and over and over again. WD Gann basically would have thousands of monthly charts that he's looking at, all right? And I think he had people drawing the charts for him. All right. I mean, back then they didn't have computers or anything like that. So he would have people come in and stencil out and draw in the charts of as many stocks as they could, right? And when it finally broke through a key level on the monthly chart, then he would start looking at it on a regular basis. All right. If it didn't get through that line, he wouldn't really pay attention to it. So, I mean, I kind of think about things the same way. I pretty much would put in like a horizontal line there and say, look, you got to get through that, and then it's game on. But I'm also at this point when we're getting close, and and this has gone on for a long time, I'm starting to watch it a little bit more closely. Now, I think what's interesting about this is, this had this pattern and it had kind of a deep pullback before the breakout. And so it broke out. And then if you were going to play this, you kind of needed to let it pull back and play the higher low after the breakout, because you didn't have any kind of real signal here on this time frame, all right, in terms of green being above and ready to go. Now, it had a low ADX condition prior to this drop, and then it had another low ADX condition after the drop, all right? But I like to look at the price bars and the overall action itself, and to me, this just looked really, really attractive, very quiet. Other than this swing here, this was a very quiet and a pretty tight looking pattern. I know it only had a small period where all three lines were below, but I mean, to me, this was just a really attractive situation where we were getting the 18-month rising again, and we were getting the 18-week rising here. We had that combo of the 18-month and the 18-week together, and we had we did have a couple year period of low ADX in place, and we had a really attractive turn in the MACD at the 0 line. After a couple years being down, we figure we'll have at least a couple years going back up, all right? So this is the kind of the idea where if you're going to play breakout patterns, you need to make sure of a couple of things. Number one, we want to have either a very strong ADX prior to the low ADX condition that takes place on the monthly. All right, we want to look at monthly, weeklies. Monthly is the higher time frame. Weekly is the lower time frame. Monthly is the setup time frame. Weekly is the trigger time frame. All right, and then what we're going to do is on the monthly chart, we're looking for a sideways line. If you can't find a sideways line on the monthly chart, then you probably should move on to something else. If you're looking for a breakout trade, all right, if you're looking for a breakout trade. So number one, that's a top priority, is finding the sideways line, and it has to be at least a couple years. I really like the ones like this that, bump its head on the same level for 4 or 5 years, all right? We want to have the MACD above the 0 line, preferably, but in certain cases, we just want to make sure that that has worked off an overbought condition. And then we want again, either a very strong ADX that works off the overbought, or like we saw in silver, have a low ADX condition for an extended period where all three lines are low for part of that, at least part of it, all right? So we want to have the monthly chart showing us that there's either extensive strength behind the move prior to the consolidation pattern, or it's a long, elongated low ADX period with low volatility as well. All right. So if we have one of those two things in place, then we should be zeroing in on that. On the side of the trigger, if we have a 1, 2, 3 pattern, then we can buy the breakout. All right. If you have a pattern that is going like this and pulls back low and then breaks out, so this would be the DI, positive DI. If green DI is holding above red prior to the breakout, and this is the breakout pattern, and the price is breaking out, and this is doing this, then we can buy that breakout. All right. If we don't have that, like we did here, red popped up above before the breakout and green then moved up, then we have to buy the higher low, the pullback. We have to wait for a test of that breakout area. So that could help you a lot. A lot of times you might buy the breakout where red was above, and all this was just another fender bender where we're just moving up and then breaking down. You just constantly get these little nicks and cuts because you think it's starting, and then it turns right back down into the breakout area. So if we get a breakout without DI confirmation, we have to wait for a higher low to form, a test of that breakout area. All right. Let me know if you have any questions. We'll see you next time.